What's beautiful about today's market is you can put that out there, let's say, as a turnkey rental, and you will have investors come in there and they will pay amazing prices.
You're listening to 5 Hour Real Estate Week, where you'll learn to consistently buy real estate in only 5 hours a week. So if you're ready to invest in real estate, achieve financial freedom, and own the lifestyle you deserve, even with your job, this is the show for you. Now, here's your host, Mike Butler.
Okay, hello and welcome to Market Mondays. Mike Butler here. And today's topic is going to be know when to hold 'em and know when to fold 'em, just like the old Kenny Rogers song. And so in today's market now, we have too many buyers and not enough properties for sale. In my hometown, for example, just about 2 weeks ago, we normally have anywhere from 3,000 to 5,000 houses for sale on our MLS. About 2 weeks ago, 2.5 or so, 861 houses for sale. That's it. So if you are looking at polishing your portfolio of rental properties, I want you to do this. If you already have some rental properties, go in there and take a look at the ones that you might wish you would prefer not to have. Okay? For example, let's say you got a house that was built a long time ago. It's got wooden siding. It's got box gutters. It's a high maintenance kind of thing. The floor plan is not the best in the world. And you just wish that you didn't have it and you could just swap that out for another property. Okay, well, if you have properties like that, now odds are you got them running, you got it good, you got a tenant in there that's paying rent. Well, now is the time to look at your portfolio, the ones that you already have, and take a look at the ones that you wish you didn't have. Like you'd like to swap this one out for a better property. Okay, and so I've got several of those. And what's beautiful about today's market is you can put that out there, let's say, as a turnkey rental. And you will have investors come in there and they will pay amazing prices, okay, just absolutely outrageous prices so that they can start growing their portfolio of rental properties. And here's what's really cool about it. You might think, well, I got to wait till that tenant moves so I can go in there and do this and do that. No. Okay, number one is hopefully you got a great tenant in there. And then number two, what's beautiful about this is now you can market that thing and say, hey, I've got a turnkey rental property. The day you buy it, you have income. Isn't that phenomenal? So take a look at I would say this, step one, if you already have rental properties, take a close look and carefully review the ones that you would prefer not to have. Okay, either they're high maintenance, maybe it's a neighborhood, maybe it's the style of the house, maybe it's not energy efficient. See where I'm going with that? And then you can sell those at a retail price to another investor. They'll pay top dollar because it's turnkey and it's producing income the day they close. So do that. And then hopefully when you sell those properties there, you're going to have a decent profit. And worst case scenario, you could do a 1031 tax deferred exchange to defer paying any kind of capital gains tax right now and invest that money into a like-kind property. It's a little bit better, okay? Or take a look at, now I don't know all the details, something called a monetized installment sale. I'm not an expert on it. I just know that that's been all the rage here lately. So check that out. Well, what if you don't have rental properties right now? Is this a know when to hold them, know when to fold them? I think so. So here's your ground rules. So let's say you don't have any rental properties yet and you're just getting started and you like the 1, 2, 3, 4, 5 that you have and you don't want to swap those out. Well, do you stop buying right now? No, but I want you to really focus and cherry pick on what you do buy. For example, okay, to start acquiring rental properties, you got to pay yourself first. Now, what do I mean by that? Well, let's do the math. I got a little simple formula for you here. So if you could write this down. So start at the top and put rent. What's this thing going to rent for? So let's do a Fred Flintstone story. Let's say $1,000. Well, next line is, it's not any of the normal expenses. I want you to pay me first. Pay yourself first. That's the very first thing. I hate this mindset of getting leftovers, okay? You're in this to benefit yourself, your family. This is going to be your pension, all that kind of stuff. So pay me first. So if it rents for $1,000, how much you want to put in your pocket every month? Okay, on a situation like that, let's do $400. Okay, and then underneath that is going to be your regular overhead expenses. So 1/12 of your annual property taxes, 1/12 of your annual insurance. Okay, if you have any homeowner association dues or additional city tax or something like that, take a look at that and make sure you have that in there. Then we're going to allow for repairs. Now, how do you price what your repairs are going to be? Well, if you've got a newer house, okay, that has a wonderful floor plan, it's more energy efficient. A lot of those are plastic houses where they did urban renewal. They went in low-income neighborhood. They scraped off these ugly houses, demolished them, hauled them off, and then people came in and built these plastic houses. Those are pretty energy efficient. They got great floor plans. So, and they're very low maintenance because the outside is virtually maintenance free. Well, if you got one of those, you could probably get by with about, I'm going to say $50 a month for repairs. Now, remember when we talked about know when to hold them, know when to fold them at the very beginning of this? If you've got one of those behemoth albatrosses that's very, very old, it's got some settling in it, it's not energy efficient, the floor plan is horrible, well, you're going to have more maintenance. It's got wood siding and box gutters and all this and that. You're going to have more repairs and maintenance on something like that. So if you have a house that's something like that, I might allow $100 a month for that. Okay? So it can go anywhere from $50 to $100. And keep in mind, $100 a month, that's $1,200 a year that you're allowing for repairs. That's pretty steep, okay? And I'd rather be conservative and overshoot that than to come in and undershoot that. So we got 1/12 of property taxes, 1/12 insurance, homeowner association repairs, and then ultimately management. Now, what can you expect to pay for management? Well, rule of thumb, to get a competent property management company that's really, truly going to look out for your best interest, that's going to be 10%. And be very, very careful when somebody says they'll do it for 5 or 4 or 6 or this and that, because if you're not careful, what they will do is fee you to death. But if you self-manage, here's a good rule of thumb. If you're going to self-manage a single-family house in a decent town, a Mayberry, USA, including my town, you're going to have about 30% overhead. So that means out of the $1,000, if you self-manage, you're going to have $300 a month for overhead. That would include your property taxes, insurance, HOA, and repairs, okay? Does not include management. If you're going to add management on that, well, then bump that up another 10% to 40%. So that's how you run your numbers when you're going to buy. And if you can run your numbers and get some super low fixed rate long-term financing, you're going to be in good shape. So with that, guys, we're going to wrap this puppy up. Know when to hold them, know when to fold them, and cherry pick what you buy in today's market. Adios. See you on the next one.
Glad you joined us for another episode of 5-Hour Real Estate Week. The best thing you can do now is put this information to action. To help you get started, Mike created a free resource for you called How to Buy 50 Houses a Year, Even with Your Job. Download it now by going to mikebutler.com/50 houses. And we'll see you on the next episode.